Hello. Energy markets continue to rally this week as escalating tensions between the US and Iran dominated trading activity. Concerns over the security of oil and LNG supplies moving through key shipping routes in the Middle East drove substantial gains across oil, gas and power markets. Despite relatively stable underlying supply fundamentals in Europe, geopolitical risk premiums remained the primary driver through the week. So let's take a look in some more detail. Oil prices moved steadily higher throughout the week as traders reacted to worsening tensions between the US and Iran, an increase in disruption to shipping in the Red Sea and the Strait of Hormuz. The week began with oil gaining around 1% as geopolitical concerns continued to outweigh broader economic and demand factors. By Tuesday, prices had reached a 5-week high after reports of escalating attacks in the Middle East, while threats against shipping routes raised concerns about potential disruptions to global energy flows. Further support came from reports of oil tankers turning around in the Red Sea following warnings from Iran-backed Houthi forces. The bullish momentum continued into Wednesday as the conflict intensified. Reports of additional US strikes on Iranian targets and warnings regarding Iranian nuclear infrastructure increased fears of a broader regional conflict. Meanwhile, Houthi attacks on Saudi oil tankers forced several vessels to divert, adding further concerns over supply security. On Thursday, oil prices surged again after the Houthis claimed responsibility for attacks on 2 Saudi tankers in the Red Sea. Additional support came from comments by President Trump, warning that the US would hold Iran responsible for any future attacks on commercial shipping. As a result, risk premiums increased significantly across the markets. Last night, front-month Brent closed just over $100 per barrel, which is up 16% compared to last Friday. European gas markets recorded another strong bullish week as geopolitical tensions added to existing concerns over storage refill progress ahead of this winter. On Monday, prompt and near-curve contracts firmed despite relatively healthy LNG arrivals and Norwegian supplies. The market remained focused on ongoing disruption to tanker movements through the Strait of Hormuz, while European storage levels of around 54% remained more than 10 percentage points below the same point last year. Tuesday saw further gains with contracts linked to the summer's storage injection period leading the rally. Front-month prices moved to their highest levels since March, supported by continued military escalation in the Middle East and concerns that LNG exports could be disrupted should regional tensions worsen. European storage levels remain well below historical norms, reinforcing concerns around the winter supply adequacy. Momentum once again continued into Wednesday. Geopolitical risk premiums remained firmly embedded throughout the curve, particularly across Winter 26 and Winter 27 products. By Thursday, additional support emerged following reports that Qatar may extend force majeure declarations on LNG cargoes through mid-October. Combined with European storage levels remaining at 54% full and increasing competition with Asia for LNG cargoes, the market remained firmly supported. Last night, all gas contracts closed higher than last Friday. Winter 26 closed at 151 pence per therm, which is up 8% compared to last Friday. Power markets followed gas higher throughout the week, with wholesale electricity contracts recording strong gains across both prompt and the forward curve. On Monday, rising gas prices and concerns regarding French nuclear generation supported the market. Modest wind output forecasts increased expectations for gas-fired generation, while ongoing concerns regarding restrictions within the French nuclear fleet continue to support UK prices. On Tuesday, power contracts moved higher alongside gas and oil, while weaker carbon prices limited gains further along the curve. Geopolitical developments remained the dominant influence. Wednesday saw another strong session with gas and carbon markets both providing bullish support. European power prices strengthened broadly, allowing UK contracts to continue their upward trajectory, despite weather forecasts remaining close to seasonal norm. On Thursday, forecasts for below average wind generation across the UK and much of Northern Europe provided further support, although strong solar output is expected to partially offset the lower wind generation. The anticipated renewable shortfall is likely to increase reliance on gas generation. So last night, all electricity contracts closed higher than last Friday. Winter 26 closed at £127.8 per megawatt hour, which is up 7% compared to last Friday. You can download the full version of this market report from our website. Thank you for watching, and we will see you next week.